Regulators are getting nervous about the end of the various programs out there designed to help consumers and what's coming next. This is the Mortgage Banking Livestream. Welcome, this is the Mortgage Banking Livestream. I'm Troy Garris Horn. Today is August 10th, 2020. We are here to educate, connect, and entertain. Today we're going to talk about a business update. We're going to talk about a regulatory update. In particular, we're going to focus on a couple of issues in the regulatory front. If you have any questions, any issues you want me to address, any questions or comments that you want to send to me, if you're watching this live stream in the YouTube channel, the contact information is just below. If you're watching this through one of the other various social media platforms we are on, you can send me a text or give me a call, 301-461-8952. Again, that's already in the YouTube channel. You can also just email me, troy@garrishorn.com. We have lots of communications going on. We'll try to get to all the questions, all the comments that you send. Any topics you want me to address, happy to do that. We have lots of great support, and I'm enjoying talking to the various people. And as somebody mentioned the other day, Alonzo Sheffield of Cross Country Mortgage was on, and Alonzo confirmed that, yes, indeed, I do read all of the comments, and I read them myself, and I respond to them myself. And we have a lot of fun that way. Couple shouts out as we get started. California MBA's Mortgage Innovators Conference, August 17th and 18th. If you haven't already registered for that, check it out. California MBA is a wonderful organization. The people out there, Susan Malazzo and others, just fantastic people. My law firm has a couple of partners out in California, and they are heavily involved in that organization, and we definitely support them. Susan Malazzo and crew, just fantastic people. Texas MBA, the Mortgage Symposium, and the Reverse Mortgage Day, those are coming in November. They don't have a firm date set yet, as the last I heard, but it's definitely going to be in November. It's definitely going to be virtual, and they are working hard on that. I was on a call just the other day when they were talking about that. A couple of special things as we get started too. Josh Weinberg, First Line Compliance. Josh was on last week and was talking about what to do whenever you ramp up in volume. There's a sudden surge, and how you manage from a compliance perspective and in a compliantly business-friendly way, how to handle that. It was a great conversation, actually. Josh Weinberg and Lonzo Sheffield, the person I mentioned a moment ago at Cross Country Mortgage, both of them were on. Fantastic conversation. If you haven't, check it out, and I think it's something you will enjoy. Chris Tamman at CoreLogic, thanks, Chris, for the comment. Chris is a wonderful friend of mine, and doing wonderful things over at CoreLogic. I've been working with Chris for some time, and just a stellar individual, just one of the many people that I enjoy working with in this industry. A couple business updates. Housing remains relatively strong. The cycle is continuing its regular cycle. Mortgage credit availability is up. This is good news. It's up for the first time in 8 months, according to the MBA. And part of the reason it's up is because of increased availability from ARMs and from jumbo loans. As you'll recall, there was a sharp decline in those products, especially on the jumbo side, just at as the pandemic set in, and there was a lot of uncertainty. So it's starting to stabilize after the COVID-19 pandemic has ensued, and we've been trying to figure this out along the way. But mortgage credit availability up, and that's good news. And you can get that information if you want. Just shoot me a text or an email, and I'll send it over to you. Mortgage applications. Now, again, this is how the cycle works, right? This is how the business works. It's nothing goes up forever. Nothing goes down forever. Mortgage apps are down 5% according to the MBA survey from the prior week, and that doesn't mean that there is a concern. In fact, it's usually the sign of a healthy market when you have a week where apps are up, a week where apps are down. It just kind of depends on the market, and it feels its way through the various market cycles and the ebb and flow of volume. So it's actually a good thing. And again, fantastic people at the National MBA who put out that data. It's data that is always helpful, is always appreciated. Another great organization, NAR, reports that, so National Association of Realtors, if you're not involved there and you're in the mortgage business, by the way, why aren't you involved there? Because first of all, everybody talks about NAR and how extensive the network of people is at NAR. And in addition, how, a lot of times people talk about how strong of a force they are in Washington and elsewhere. And that's true. But if you're not involved in NAR and you're involved in real estate finance, something's wrong there. There's a disconnect. You need to be involved there. But NAR reports that foreign purchases of U.S. properties are down. It's down by dollar volume, down 5%. In numbers of units, down 16% last year. And so this is an interesting development because on the one hand, we have the question of affordability and housing. And anecdotally, at least, there's a lot of conversation about how purchasers from other countries have been driving down supply, right? And driving up prices, or helping to sustain and drive up prices. Well, some of that demand has decreased, at least according to the survey and the way that they've measured it. And so that could be good news in the sense that maybe there could be more properties available for purchasers who are here in the U.S. There's also a lot of movement. In particular, my daughter lives in New York, and we have a lot of friends and clients in New York. And I will tell you that in particular that city, but also lots of cities where the pandemic has rolled through and has been problematic, there are people who are rethinking to some degree the places that they want to live. Do people really want to live cramped inside the city? Do they want to live outside the city? Do they want to have proximity to it? Or does it really matter? If you have now gone through this pandemic and you figured out that your actual work doesn't require you sitting in an office in a particular city, why have the commute? Why have the place that is in the city? Personally, I'm a city boy and I love the city, but I'll tell you that people are really thinking through those choices. And so that is an interesting economic development that will continue to evolve and continue to be fascinating as people roll through there. Keep your eyes on that. And again, NAR is a good place to get that kind of information. PPP loans. One point that people need to be thinking about in the mortgage business, the PPP loan deadline ended August 8th, so just last week, right? And so there's a question of what effect this will have on employment, what effect this will have on people that are in those businesses, being able to sustain those businesses, and as schools start to roll back into session, what's going to occur, because nobody really knows, right? We are all hopeful that whatever path the various school systems find to getting children back into, whether it's virtual learning on a rigorous basis, or whether it's in-person learning, or some combination of that, whatever it is, those PPP loans were helpful in the sense of making sure that businesses would be able to sustain themselves in the downturn. When people start rolling back into school, whatever version that takes, the economy could be affected. And if there are small businesses out there that had difficulty the first time around, if the pandemic increases in numbers of problems, what effect will that have on those small businesses? And in fact, even now, with a lot of the restaurants, for example, and bars, et cetera, again being told to shut down or to back off. So all of this is evolving as we speak, right? We've had a couple of CPAs on the show in recent times talking about people that have gotten PPP loans and how to make sure that they maximize their forgivability of those loans. I'll tell you, the rules are ever evolving over the Small Business Administration and Treasury. And so business owners really need to be careful in how they handle those payments and what they use the payments for. And so, that's an area where the help of a CPA or somebody like that can be almost invaluable, be able to maximize those forgivability of those loans. We'll bring some of those people back on too, by the way, because I know that information is helpful to a lot of the viewers, and also the rules continue to change. So we'll get somebody back on pretty soon talking about those. And in fact, if you know somebody who's great, who you think would be helpful on the show to talk about the PPP loans and how to maximize forgiveness, send their name to me or tell them to give me a buzz, and we'll try to get them on if that's possible. A couple other things. Jim Aronoff at Friedman. Thank you, Jim. Doreen Gusar, congrats, Doreen, over at Roostify, making great things happen in the mortgage industry. Adam Neft at Fairway. Thanks, Adam. Aaron D at Loan People. Aaron, a fantastic person in this industry, a true gem, and a young up-and-coming exec. Aaron is if you don't know Aaron, you got to get to know Aaron. She's fantastic. Okay, couple of things on the regulatory front. I mentioned previously that the OCC has put out a notice of proposed rulemaking regarding the true lender rule. Those comments deadline is September 3rd. So we are now August 10th. September 3rd. Doesn't give you much time, but if you want to get your voice heard, that's the way to get it heard. FFIEC. So this is the interagency department. The FFIEC, there was an interagency statement on August 3rd. So about a week ago, the FFIEC's agencies put out an interagency statement regarding what is going to happen and what people should be doing, what their various regulated entities should be doing in connection with the end of various programs that were designed to help out in the COVID-19, the coronavirus time period, this pandemic, and the shutdowns and the related activities. So these agencies, and this interagency statement comes from the CFPB, the FDIC, the FRB, so Federal Reserve, the NCUA, OCC, and the State Liaison Committee. So these agencies got together, put together a statement talking about what businesses, what lenders should be doing in connection with the end of the various programs as they start to either phase out or come to the end of at least some initial periods with regard to loans. And so some of the activities or some of the things that businesses should be thinking about in this statement by the joint agencies is the joint agencies really want to encourage a few things. Prudent accommodation, so making sure that the accommodations that you're making are prudent, and that's including such things as balancing the risk management of the entity and consumer protection. Now, some of these agencies have very different missions, right? So, for example, the FDIC, part of the FDIC's mission is to make sure that the financial system, the banking system, is safe and sound. Another part of their mission is consumer protection, but balanced against consumer protection, not necessarily in contravention of it, but in addition to, is safety and soundness. Without a good banking system, there is no need for consumer protection because there's no banks. So the FDIC, OCC is similar. They have a safety and soundness mission. On the other hand, CFPB, the Consumer Financial Protection Bureau, right, doesn't have safety and soundness as part of its chief mission in its own view anyways. Now, people can argue that, in fact, the CFPB also has safety and soundness as part of its mission because, for the same reason, if there's no banks, if there's no lending, if there's no mortgages, there's nothing to be protecting consumers from. But nevertheless, the CFPB definitely has, at least in its own view, historically, the concept that the consumer protection is paramount. So risk management and consumer protection, well-structured and sustainable accommodations, and the agencies are taking into account here, for example, that you got to have something that's sustainable. So if people, for example, renters, for example, mortgage borrowers, if they can't pay their rent or their mortgage, the knee-jerk reaction might be, well, we're just going to have to foreclose on them. But if you do that, you could have a cascade of problems. You could have the domino effect that we saw back in the financial difficulties back in 2007, 8, 9, because you have a foreclosure on one home, you have a foreclosure on another home in the same neighborhood, it can start to get out of control and it can start to drive down prices, and that creates a whole litany of other problems, right? And so sustainable accommodations are what the agencies are encouraging here. They're also encouraging good, sound accounting and regulatory reporting, so to make sure that the lenders and the financial services companies that are involved are making sound decisions and have good accounting and reporting systems, and then are also getting the information to the regulators, who have a much broader view than the particular specific companies that are in particular specific areas. And so they're encouraging good, sound regulatory reporting, and also internal controls. Internal controls is always, always, always on the minds of regulators these days. In particular, it's long been on the minds of the bigger banking regulators, the traditional banking regulators, the safety and soundness people. But also, once the CFPB got up and running, internal controls has become paramount in that agency's mind, and they have been requiring their regulated entities to also focus on the internal controls, because when you have internal controls, you can run a more efficient system. You can also protect consumers better, but you can also build a better business, because when you build good, sound infrastructure, the business just works. And so this is actually helpful information out of the FFIEC, but I think it also shows that the FFIEC's agencies and the agencies that are making this statement, they are seeing that the various relief programs, whether it's federal or state or otherwise, the various relief programs that have been put in place, some of them are starting to come to at least to the initial ending point. And so this is an area where the regulators don't really know what happens next, and they're trying to navigate through the possibility of the problems getting worse. Of course, the pandemic itself, again, like we talked about a little bit earlier, could get worse, but at least they have some control over the possibility of what types of steps and how companies manage through and mitigate the risks of the problems that have come around in terms of the economic and the financial impact of the coronavirus. We can't fix the health problem overnight, but we can manage through the financial aspects of that. And that's what these agencies are focused on. If you want a copy of this, give me a call, shoot me a text, shoot me an email, and I will send it to you. But helpful information out of FFIEC. One point I want to mention, HUD certifications. So HUD has housing counseling agencies, a variety of housing counseling agencies out there. And these housing counseling agencies do good work, right? They're required in a number of different aspects of a variety of programs. But in addition, they just do good work. They teach people how to be good homeowners. They teach people how to be good, sound financial consumers. And HUD has has certifications that come out of the housing counseling or surround the housing counseling programs. So HUD just recently extended the deadline for obtaining the certifications. What's happened is in the pandemic, there were certifications that were required to be received by August 1st, 2020. Well, that date has come and gone, and HUD noted that a number of organizations, somewhere close to 50%, had not yet received their certifications. And so, and checking into this a little bit, HUD has realized that a big part of that is because the related centers that are needed for the certifications are closed down or have been closed down. And so what HUD did is it just pushed that deadline back. So the deadline used to be August 1st, 2020. That deadline has now been pushed back to August 1st, 2021. So 1 year back for the deadline. This may come up in your vendor management. This may come up in programs that you're involved in. So just know that HUD has pushed that deadline back by a year. If you need a copy of the Federal Register notice that came out on that, let me know. I'll send it to you, and we can get that information over to you. Couple other thank yous for support. I'll tell you, I am so moved. We have such a great support system. I love this industry, and I love the people that I'm involved with in this industry. And I will tell you that we just get so much we have so many great people and get so many helpful comments and so many, I can't describe it. It's just a wonderful group of people, and I'm very happy to be involved with you. Matthew Martin of First Choice Loan Services. Matthew, fantastic person. Matthew, I hope to see you soon. Ian Wright, Julie Gross, Certainty Home Loans. Julie, thank you for everything you do. Jennifer Prama, MDC. Jennifer, fantastic person, and super bright, and just the kind of person that you would want to have in this industry with you. Just so many people. Thank you for the support. If you enjoy this live stream, if you think that we're providing good information, subscribe below. Just click on the YouTube subscribe button. Share the link with your friends. Send your comments. Send your questions. We'll get them on here. We'll get them answered. Sometimes it takes us a little bit of time to get to them, but we're pretty quick at this. And so, like Lonzo Sheffield would tell you, we get them on quickly, and we just have a good time doing this. So that's it. That's the biz update. That's a regulatory update. This is the Mortgage Banking live stream. Peace out.